Welcome back, guys. We are here again for another video. And in today's video, I'm going to be titling this Holding Yourself Accountable in Your Trading. And I love doing styles like this. And just based off of the feedback that I got in my last video, just like a message to each and every single one of you for your trading career and journey in the year of 2025. I just know and I feel like I could resonate with all of you. And again, I want you to feel like I'm just sitting across from a table talking directly to you, just giving you a message of encouragement and some motivation and just a tip that you can take and run with for your trading career. Now, this is going to be some tips, some psychology, some rants. So just buckle in and listen up and enjoy. But holding yourself accountable in your trading has to do with multiple different things. And when I say this, I mean that you should be making every single move that you do in this business like that you have almost like you have a boss or someone to report to right at the end of the day or at the end of the week, quarter, month, year, whatever it is. You should always feel like you are making each move or every single execution while you feel in the back of your head someone is watching you. I guarantee you that every single loss that you make in this business and you're not journaling those losses, or every single trade that you think is just kind of like it is what it is and it's slightly outside of your checklist, but you think that it's good enough to execute, and then you end up losing and you kind of just brush it off and you don't hold yourself accountable. When you do those multiple times, you're going to end up seeing the fact that you've actually took A-plus trades in the past, made money from them, and then these small extra trades that you're not accounting for, they're the reason why you're running in circles and not actually having a increase or walking up the stairs to the point of profitability to your end goal of being a full-time day trader. And I already said this analogy in my last video that trading is like walking up a set of stairs. And when I say walking up a set of stairs, it means that you need to move at a steady pace. And a steady pace would be taking each step one at a time and not skipping any. And that, my friend, means that you need to keep yourself accountable and set limitations on yourself when it comes to executions and your plans throughout every single trading day, week, and month. So when it comes to my set of rules that I follow in a given trading week, I'm going to break them down right now for you. So whenever I have 2 losses in a trading day, that is my cutoff and I'm done for that day. And let's say that I'm risking 1% on each trade. That's a 2% loss on my account. If I lose 2 times in a day, that means that clearly the market is showing me that I should not have action or have risk laid on into the table in these current market conditions. The first one and the first loss could just be an early entry or just bad evaluation, and I could then come back for the second trade and reevaluate that loss just to see if my bias is correct that day. Now, bias and narrative building is kind of everything when it comes to trading and forming and framing something that will put you in full confidence behind an execution that you're planning on taking. And when you take 2 losses in a day with a given bias and a narrative build, that's the market telling you to stop. And if you go beyond that, you're going to feel it. And if you're going beyond that with the intention to make the money back that you lost, you're going to feel it even more, and it's going to hurt you mentally even more. Because I know a lot of you are just making these mistakes nonstop over and over and over again. And that's where you're going to spiral. You are going to spiral out of control when you can't hold yourself accountable and just accept the loss and walk away. because I know so many of you are struggling to just let a losing trade go. And when you're in this business for long enough, you're going to become numb to the pain of seeing a red P&L, because you know that long term you have built yourself a confident entry model checklist. You know exactly what you're looking for, and you have seen your A-plus trade setups. Now, when you are so completely confident in your execution and you know what your best trades look like and they don't replicate like you're watching price right now, when you're about to execute, you're not going to feel as confident. And that's just the name of the game. And you know deep down that you shouldn't be taking that trade, but you do it anyway. And then when you lose, you're like, what am I doing? And why is this going against me? Because you didn't follow every single one of your steps perfectly. Like for me, whenever I'm taking a trade, I have certain criterias and expectations that lead me to an A plus, an A B plus, or a B setup. And I'll break them down right now. An A plus trade for me is when price tags an internal range liquidity pool. We create SMT divergence, and let's say that I'm looking for a long setup. I want the stronger pair to tag an internal range liquidity pool, create SMT divergence, and create that higher low inside that internal range liquidity pool. Then I'll drop to the aligned lower time frame and seek that execution for my step 3, looking for that lower aligned time frame, change in state of delivery, and that specific down close candle that runs the short-term lows that I could utilize as an execution to then go long. This is an A trade for me. An A trade will be the same criteria. Instead of executing on the stronger pair, I'm executing on the weaker pair, the one that makes the lower low inside of the internal range liquidity pool that's also creating SMT divergence. Then same criteria, dropping to the aligned lower time frame and executing off of the candle that runs the short-term low, and then we close above that opening price comes back up into it, and then I buy it. Now, moving into the B plus trades. The B plus trades is when I'm watching price run an external range low or a high, and then I am taking the execution. Let's say that I'm going short. I'm executing the pair that is making the lower high compared to the one that made the higher high running the external range high. And then that's our SMT divergence running an external range liquidity pool. And then I drop to the aligned lower time frame. I'm executing on the shorter and the weaker pair off of the candle that ran the short-term high. We close below it. I execute off of that specific up-close candle that ran the short-term high, retrace back into it. That's my CSD OB. I go short. For a B trade, I am executing off of the stronger pair if I'm going short, the one that runs the external range high, and the opposing pair fails, and then I go to the aligned lower time frame. I look for that up close candle that ran a short-term high. When we close below it, I then use that POI as a short entry, and then I execute. You see how easily I just gave you 4 different scenarios as to when I'm using my forever model? I know exactly what I'm looking for, and I only have 3 steps behind my execution process. And if those 3 steps do not occur in my entry model criteria, I don't care what happens and I don't do anything. I sit back and I just legs up, no worry in the world, and I'm just completely calm. It is what it is. It can be frustrating at times for you to watch price kind of run and move without you when you already know where it's going to go. But you have to look at this game and understand that there's going to be a million opportunities. Today's not going to be the last trading day of the year, or tomorrow or the next month. The market's not going to be closed forever. What happens when you look into the water and you're watching waves crash? You see one big wave come up and crash onto the break. After that one wave crashes, does that mean that there's not going to be another wave that forms behind it? No. Every single wave that crashes in the water, there's always going to be another one that crashes and forms behind it. Now, I know in the beginning and even in the intermediate term stages, you're going to always think to yourself that if I miss that trade, then that's the end of my trading career, and I'm going to have a FOMO spiral manic episode, and I'm not going to recover from this because I missed an A plus trade setup. You're telling me right now that you're only going to have one A plus trade setup? No, there's going to be multiple trades. Don't tie down and freak out just because you missed one execution. Be grateful because you followed your entry model checklist. You want to be looking at this as a marathon and not a sprint. You want to keep yourself at a pace, and you want to move steadily, just like I said in the previous analogy about how you walk up the stairs. And there's no end goal, there's no top floor or final destination that you're trying to go to. You are inching and just consistently moving at a steady pace like this. Not like this, not skyrocketing. You are climbing slowly but steadily to get to that final destination. And if you want to have a final destination, that would be called being yourself. That would be called calling yourself a full-time day trader. Really listen to these words that I'm trying to tell you, because it could actually be this easy. But a lot of you are just overcomplicating the journey. You are letting your emotions get way too ahead of you. And that's going to be the downfall in your trading. And it's the only thing that's holding you back. The only thing that's holding you back is the person that stares and looks directly at you in the mirror. Now, for me, the only person that's holding me back is the person that you're looking and watching right now, myself. And I know what to do in my trading, but do you? Because I just kind of gave you the golden rule and the only things that you're ever going to need for the rest of your life. I know my entry model works to the T, and honestly, it might not resonate with you perfectly. And you might have another person that you follow that you understand their model. And if you understand it and it resonates with you, then run with it. But follow the rules. Follow the rules behind the model and don't execute outside of it. You don't need multiple different strategies, because in the beginning stages, you want to focus on just one model and one execution pattern. And once you do that for an extended amount of time, then try something else out. But for the beginning stages, 6 months in, a year in, or even 2, keep your head down and focus on one thing, because consistency will be the key to your goal of profitability. Consistency is key. It is the key to everything when it comes to any profession. Whenever you're working a job and you start off as a novice, you're an intern for a company, you're learning the ins and outs of the business, and you are trying to study and learn what the senior analysts are doing, because they started at your intern level and they worked their way up in the company. Us as traders, we started off as novices. We kept on making the same mistakes over and over again, strategy hopping, had shiny object syndrome. In the beginning stages of my trading journey, I felt like if I didn't have action or risk laid on when the market was moving, I felt like I was going to miss an opportunity. And that was my biggest downfall in my trading. I can safely say that right now, 90% of you are going through that same issue, because I was addicted to the charts. I couldn't keep myself off of them. And it sucks, but I had to learn the hard way. Learning the hard way resulted in me losing thousands of dollars and hundreds of accounts, my personal accounts and funded accounts and challenges and stuff like that. It is the worst once you feel like you're getting into a groove and then you make one mistake, you skip one step, and then next thing you know, you just lost everything that you worked so hard for. And I know for a fact that that message right there is hitting a lot of you hard, but I want you to know deep down that if you actually just keep yourself tuned in and disciplined to just a couple rules, like I just said, losing 2 trades in a day, you're done for that trading day. Another one is if you lose 4 trades in a given week, you're done for that week. That's 4% loss in a given week. You need to come at the end of the week and reevaluate yourself or take a break, because breaks in trading will help you mentally reset everything that is going on in your head emotionally. And that was another thing that I failed to do. I failed to walk away and step back from the charts because, like I said, I needed to have risk laid onto the table at all times. I was watching until market close at 4 p.m., and then I was watching it immediately when we started opening up at 6 p.m. Eastern Standard Time and looking to trade almost every session besides London because I'm from the East Coast of the States. I'm on New York time. So London was never really my issue, and on top of that, I needed sleep. But sometimes it wouldn't even stop me, and I would wake up in the middle of the night just because I thought that a setup would form in London, and I would end up losing sleep and losing money at the same time. So I would just kind of bite myself in the ass because I thought that I was going to miss a move when clearly I was just tied and married to a bias that I couldn't get myself away from. So yeah, that also happened, unfortunately, multiple times. And I bet you it also happened to you guys too. So I feel like I'm not alone here. I just really want each and every one of you for the year of 2025 to hold yourself accountable in your trading and move as if someone is watching everything that you do. And in your journal, I want you to be noting your emotions while you're taking your trades. I want you to finish whenever you're done your execution, whether it's a win or a loss, have a section in that journal of how did I feel while I was in the trade? How did I feel, as in, was my heart beating out of my chest? Was I freaking out? Or was I so confident in the trade that the risk really did not even matter to me? And honestly, that should be how you move in this game. And I'll also tell you another tip that really helped me whenever I took a trade. At least now I'm live streaming Monday through Friday, so I have to watch the trade move in front of my community. But in the beginning process, when I was really struggling and every single time I took an execution, and I was noting this in my journal, very skeptical about this trade, even though that it was a win, I didn't feel good. My heart was beating super fast and I felt very anxious while the trade was moving, and I wanted to close really bad, and I ended up closing the position early because I saw a pullback that scared me. Instead of watching the trade move, if you're not there mentally and you're still a beginner or an intermediate trader, try the set and forget method. Whenever you buy or sell in a position, the second that you execute, set your stop loss and set your take profit. Primarily, I'm giving you a preference. Keep your take profit levels at a 1 to 2 risk to reward. I think that's just the best and the safest way for all of you guys to move. Set an alert at both SL, TP, close your charts, walk away, and occupy yourself, whether you're at work and you're executing, or if you have time and you can just close the charts and go to the gym, accept the risk and walk away. Because I guarantee you're going to then get yourself into a rhythm of having, 1, consistent risk, and also 2, less exposure and time on the charts. Because less is more in this game. Because if you know that all you need to do, execute a trade, accept the risk, put your stop loss in, your take profit in, and then you can walk away and do whatever you need be. If you get an alert while you're out away from your desk and it hits your stop loss, you're not going to be in a scenario where you're able to go back on the charts and try and re-enter. You're away from your setup. So like you've accepted the risk and you lost, or you accepted the risk and you won. Only thing that you have to do now is just go home and journal the trade, say what you did, and move on to the next day. That's the best way to look at this. And I promise you, that's what made a big turning point for me in my trading when I did a set and forget method, because it made my anxiety and my stress levels in this business so much lower than I had it before. The second that I started dropping my chart time on my analysis and my expectations for the day was my slow and steady pace climb to get to where I wanted to be at. And I feel like a lot of you do struggle with that issue of attaching yourself to the charts. But when you start detaching yourself away and you become more mechanical and you have a systematic approach to laying on risk onto the table when it comes to executions, you're going to become a much better trader. And that will be a big relief and weight off of your shoulder when you actually start consistently following the rules that you said you were going to follow. And you're actually holding yourself accountable. And that was my turning point for me. And if I feel like I'm just talking to every single one of you in the same stages that I was going through at the beginning, if it worked for me, it could work for you. I am no different to who you are as a trader. I am no different at all. I'm just a regular guy. I was always trying to get by the easy way out. And I went over this and I had a rant in my last video, but I just want you guys to know that everything that I went through in my trading will be the same that you go through in yours. It's just a matter of how long will it take you to genuinely hold yourself accountable. Because when I finally started holding myself accountable in every single execution and trade that I took, that's when the consistency started coming in. And I was like, I didn't notice it immediately because you're not going to feel overnight success in this. It's going to be a long-term thing, and you're going to come back and review your months of trading or your quarterly reviews. And you're going to be like, wow, I used to take 15 trades in a week, but now I'm only taking 3. Why is that? What's so different now than what I was doing before? I started holding myself accountable. I started following a strict set of rules. I started realizing what was going wrong. I made one tweak and then boom, light bulb. I am now on a steady track to get to where I want to be at. But again, don't set a time limit or a stamp as to when you think that you're going to get to that point of profitability, because that's also going to be a stress build on your behalf. Because if you say to yourself, in 6 months' time, I'm going to make $100,000. Why? Why are you putting 6 months on there? Why can't you put a year? Why can't you put 2 years? If you leave that end goal, there's no, I need to do this by then. It's going to happen quicker than you expect. You need to submit yourself to time. And when you do that and you actually accept the journey and the time that it could potentially take, you're going to really do so much better than you were before. Everything is going to be in here. This is your golden key to success. And the person that you're playing against is yourself. You're playing a game of chess, 1v1. I don't even know how to play chess, so I'm going to say I was playing checkers with myself and I kept on losing. But I want you guys this year to really tune in, focus, and understand these rules that I told you in this video. Follow them strictly, and you're going to have a dramatic shift in a month's time, 2 months, 3 months, 6 months, a year, whatever it is. If you actually listen to these words that I'm saying right now, your trading will change forever. Forever. All you need to do is hold yourself accountable. And I know that you could do it. I don't think that I would have ever held myself accountable until it was to the point where I was losing so much money that I actually couldn't lose anymore. And once I actually had that realization and I started doing what the 1% was and the 99% weren't, within the time span of 3 months and 6 months, when I actually started reviewing my trades, having weekly recaps, monthly recaps, quarterly and yearly, I was just appreciating the process and the journey so much more, because I realized that I have been really growing since when I actually made that shift to where that I'm at now. And once you actually start seeing the growth and the potential that you can gain by following and being a structured person in this business, you're going to actually be so happy. And that feeling in your chest when you're like really appreciating and being so happy about the work that you did, it's going to motivate you so much more. And that's why I feel like I could just talk about this for endless amounts of time, because this video could be a day long and I could just continuously yap. This is literally Japanese. And I did this in a live stream. I did this in the last video. I'm doing this in this video. But I feel like it's so much easier to talk about something when you went through it yourself. And I know that in time, 6 months, whatever it is, year, 2 years, 3, you're going to come back to this and you're going to remake the same video talking to people that are learning now. and you're going to be like, holy shit, I was in his shoes and I know exactly what he's going through because it resonated with me so well. I'm going to portray and send out the same message just so that other people don't go through the same struggles that I was going through in the past. Now, make this year count, really do. And all you need to do is a couple things. And I promise you, like I said before, if you follow these rules, you genuinely hold yourself accountable in the year of 2025, your life and your trading will change forever. And the scalability of this business is endless and there's no ceiling. So keep climbing, keep working, follow the rules, and you'll get to where you want to be at in this business. Now, like always, good luck, good trading, and thank you for listening.